Let's be real, you're young, single, no kids, no mortgage, and someone just tried to sell you a life insurance policy. And part of you is wondering if you just got played. But before you laugh it off as a boomer scam, let's talk about why this question is way more interesting than it sounds. Term life insurance is basically renting a financial safety net. You pay a monthly premium, and if you die during the term, someone gets a payout. But if you don't, the money's gone like a Spotify subscription you forgot about. The waste argument hits hardest when you're young and single, because statistically, the odds of you dying in your 20s are lower than your chances of finishing a Netflix series in one sitting. Here's where the math gets sneaky though. The younger and healthier you are, the cheaper that premium is, and locking in a rate at 25 versus 35 can mean paying dramatically less over the life of the policy. One major insurer found that waiting just 10 years to buy term life can nearly double your annual premium, which is basically the market charging you for the audacity of getting older. The real catalyst behind the buy it young argument isn't fear of death, it's fear of future uninsurability, because health conditions can show up uninvited and without warning, like a plot twist in a bad rom-com. Diabetes, heart conditions, even a random autoimmune diagnosis can make you uninsurable or skyrocket your rates overnight. Now let's address the optimism that made a lot of young people skip this entirely, the whole "I'll get it when I have a family" mindset. Felt totally rational when you were healthy, invincible, and your biggest liability was a student loan. But that narrative starts cracking the moment you realize life transitions fast. And the version of you who needs coverage might not be the version that can afford or qualify for it. Psychologically, buying life insurance young and single feels like buying an umbrella in the desert. Absurd, wasteful, maybe even a little morbid. But the people who've been through financial planning long enough will tell you that the purchase was never about probability. It was always about optionality. History is littered with cycles of people buying insurance reactively rather than proactively. After a health scare, after a marriage, after watching a friend's family struggle with funeral costs and debt left behind, each generation thinks their story is different. And in some ways it is. But the underlying pattern of "I wish I'd locked this in sooner" is almost universal. Term life fits neatly into a broader financial architecture as the cheapest form of protection that buys you time while you build wealth, acting as a placeholder until your assets can do the heavy lifting. Community forums and financial subreddits are filled with people who grabbed a 20-year term in their mid-20s for less than $20 a month and consider it one of the smartest, boring decisions they ever made. Let's kill the biggest misconception right now: term life is not the same as whole life. And the criticism that insurance is a waste almost always applies to whole life products dressed up as investments, not clean, simple term policies. Term life has no cash value, no investment component, and no catch. It's just pure, cheap protection for a defined window of time. So what's the actual playbook here? If you have any debt that could fall to a cosigner, any aging parent financially dependent on you, or if you're even considering starting a business or family in the next decade, a small term policy right now is one of the lowest cost, highest optionality moves on the table. Keep the coverage modest, keep the premium manageable, and treat it like insurance for your future self's insurability rather than a bet on your own mortality. The discipline here isn't about being morbid or paranoid, it's about separating the emotional discomfort of planning for death from the rational clarity of protecting the people and obligations in your orbit. Process over prediction, positioning over timing, small and consistent over grand and emotional. At the end of the day, the question isn't really, is term life a waste if you're young and single? It's, can you afford to be wrong about your future health, your future relationships, and your future obligations? The answer for most people at $10 to $30 a month is quietly, undeniably no. Being comfortable with the outcome here means either you bought a cheap policy, nothing happened, and you lose a little money, or you didn't buy it, something happened, and the people around you lose a lot more. That asymmetry is the whole game. And rational preparation means tilting the table in your favor before the cards are even dealt. Whether term life makes sense for you right now comes down to your specific debts, your dependents, your health, and your financial runway. And those are exactly the kinds of conversations worth having with someone who actually knows your situation. If you want help navigating not just insurance, but real estate investing, home contracting projects, or finding the right lenders to build your financial foundation, check out the links in the description below.